This is the Brave New Coin Crypto Conversation, hosted by Andy Pickering.
Hi everyone, Andy Pickering here. I'm your host and welcome to the Crypto Conversation, a Brave New Coin podcast where we talk to the people building the future in the Bitcoin, blockchain and cryptocurrency space. 5 years ago, deep in a bear market, a group of traditional finance experts founded BitGet, and they've been building ever since. Now, with 20 million users worldwide, BitGet is committed to helping users trade smarter by providing a secure one-stop crypto investment solution with copy trading, future trading, and spot trading. Your security is their priority, and BitGet has one of the largest protection funds in the industry with US $300 million to cover potential trader losses from unforeseen events that are not due to misconduct from the user or platform. BitGet wants to inspire everyone to embrace Web3, so if you're new to crypto, learn more at the BitGet Academy with free blockchain courses, crypto guides, cryptocurrency trading strategies, and more. Or for the experienced investor, trade smarter with daily access to institutional-grade crypto market intelligence and trends analysis with BitGet Research. I've put links to BitGet Research and the BitGet Academy in the show notes, so get amongst it or simply go to bitget.com. Thank you to BitGet, and now it is on with the show. My guest today is Rekt Capital. Rekt Capital, of course, is a technical analyst, a popular chartist on crypto Twitter, and he's been on the show a few times before, but not for a little while. Welcome back, Mr. Rekt Capital.
Hey there, Andy. It's great to be back.
Great to have you back. So, yeah, where should we begin? I suppose just for the benefit of anyone who doesn't follow you on Twitter or doesn't know who you are, do you want to begin just with a little bit of background on your good self?
Sure. I've been in the crypto space for 6.5 years, started in mid-2016 or so, and learned about Bitcoin. But predominantly what really gravitated to me was the technical analysis side of things, chart analysis, and really just the psychology, the recurring cyclicality of patterns, chart wedges, triangles, and a variety of different other metrics that just help us understand the psychological story of what investors are thinking in this moment, but also what could they be thinking in the future. Technical analysts always look at charts, which are essentially investor sentiment in graphic form. Price swings up towards the upside, that's greed. Towards the downside, it's extreme fear. And it's all about trying to understand these patterns and recurring tendencies in price action. So that's essentially what I do. And I share my charts on Twitter and YouTube and also the Rekt Capital newsletter. And it's something that's really interesting nowadays, especially because we're seeing a lot of recurring historical tendencies in Bitcoin's price action as we're getting closer towards the halving. And it's a fascinating sight to see this recurring psychology already brewing and slowly playing out even.
Yeah, absolutely. Couldn't agree more. And it's a good time to talk to you, really, Rekt, because as you've kind of hinted, we are around, let's say, approximately 200 days away from the next Bitcoin halving, which is the fourth Bitcoin halving. I mean, people know what the Bitcoin halving is, but essentially the Bitcoin block reward will be cut in half, reduced by 50%. So, yeah, the new supply of Bitcoin coming into the system every day or every year is cut in half. And, you can talk a little bit about what has happened in the past as it relates to the halving. Doesn't mean it will happen in the future, but I guess this is just it's an interesting time as we come up to the halving. So yeah, how should we approach this, Mr. Rekt Capital?
Well, it's interesting because when it comes to those historically recurring tendencies and the psychology underpinning those tendencies, we can really just understand the Bitcoin halving in terms of a few phases. And just looking at one of my previous tweets, one of those phases that we're currently in is, of course, the pre-halving period. And we tend to see price action behave in a very specific way in the 200 days leading up to the halving. And in 2019, we saw a lot of volatility towards the upside and downside. But of course, we had that black swan event in March 2020 where we saw a bit of a crash. And in terms of technical analysis, that crash saw us revisit the macro higher low, which is something that also happened in 2015. And it's during these periods in the pre-halving time period before the halving where we tend to see Bitcoin crash, retrace. In 2015, we saw a retracement of 24% at this same point in the cycle. In 2019, we saw a retracement of 37% at this very same point in the cycle. So it's really interesting because 2015 was a bit more of a bullish situation for Bitcoin at this same point in the cycle. We were in a reaccumulation range. But it's interesting to see how an immediate retracement occurred at this same very point in the cycle, less than 200 days to the halving. And it just kind of gives us chartists a little bit of a caution to not necessarily be too overly optimistic on a breakout just yet, because history suggests that we might be seeing a bit more downside. But there are just some very simple major checkpoints. The pre-halving period where we see some downside, lots of opportunity for dollar cost averaging and bargain buying, perhaps for the very last time in the low 20K levels. But also once we revert from those low 20K levels, maybe even sub 20K if we're lucky, we'll see a pre-halving rally. And that's probably not going to eclipse 31K. Really does depend where we local top for the year, but let's assume that we've already local topped for the year. So the local top would be 31K. And if that persists, then a pre-halving rally next year going into the halving would probably see us revisit the 28K region, somewhere where we are right now. But then we'd probably see a pre-halving retrace. And historically, we've seen a 38% retrace on 2 occasions, a 20% retrace around the halving event. So it's that pre-halving retrace, which transitions us into post-halving reaccumulation, where price just accumulates at highs before finally breaking out into a post-halving parabolic uptrend. So there are some key phases here: pre-halving period, pre-halving rally, pre-halving retrace, and then post-halving reaccumulation before post-halving breakout to new all-time highs. And it's this historical cyclicality that we see constantly reappear in the charts around a halving event. And so far, Bitcoin is on track to repeating those phases. And I think they can be really useful in just acting as a guide on what to expect in terms of movements at very particular points in the cycle.
Got it. Yes, yes, indeed. No, I think, I guess before we talk about what could happen post-halving or after the halving, yeah, I think it's interesting that. So I'm just looking at one of your tweets, Mr. Rekt Capital, which has a chart as well, which is always good to visualize. So people can go to, at Rekt Capital on Twitter, or you've got a website that's just rektcapital.com.
Rektcapital.co, yeah.
.co, there you go, to see some of your charts. But one of the takeaways from what you've said there, number one, of course, yeah, probably less than 200 days away from the halving. And then you write in your tweet, the next 140 days may present the last ever opportunity to buy in the low or even sub 20,000. So, I mean, yeah, I don't know. Sub 20,000 does feel, quite low. I don't know if we'll get down there, but you never know. But it just, I think you could be right in that. Yeah, the next 140 days are just a really good opportunity for, I suppose, the dollar cost average people, or savvy investors, or people who are potentially aware of catalysts such as the halving and the various spot ETF applications, all that kind of stuff. We can talk about that later in the show. But with all of those potential catalysts sort of now on the horizon, it does feel like this is a real serious accumulation game at the moment, Mr. Rekt.
Absolutely, absolutely. It's a fantastic time to be paying attention to the markets, in all honesty. The next 5 to 6 months are going to be absolutely pivotal for long-term investors trying to better position themselves, if they haven't already positioned themselves, for the upcoming post-halving cycle. It's a really important time. Historically, in the pre-halving period, not much really goes on. It's a relatively boring period, lots of accumulation. or at least macro accumulation with swings towards the upside, to the downside, but no real established trend. But it's during this period of supposed boring price action that we can really dollar cost average into some fantastic bargain buying positions. And it's during this 140-day period that we only have left now. Time is running out slowly. And if we see a retrace, it's going to be during this next upcoming period of 5 to 6 months going into the halving. So we are really running out of time. And if you think about it, the low 20Ks, the 20K level, that's approximately 30% away from current price levels. And if you juxtapose that with, for instance, the 2019 cycle where we saw a minus 70% correction, of course, there was a black swan event there. But even to 2015, we saw a 25% correction. So 25% corrections have happened before, and anything above that was a bit more skewing on the outlier side, the tail end side of things with the black swan. But a 30% or 20% retrace from current price levels wouldn't be out of the ordinary. And what's interesting about Bitcoin's current price predicament is that it's currently in a triangle, a market structure on the macro sense. And as time goes on, the lower high resistance is going to decline and represent lower prices in the same way that the macro higher low is going to represent higher and higher prices. So over time, we're going to actually see the retracement depth for a potential drop shrink over time. So if Bitcoin, for instance, were to crash right away from lower high where we are right now to macro higher low, it would be a 30% crash. But in November, that's going to be a 28% crash. In December, it's going to be a 26% crash. Even all the way to February, if we continue to just not really trend much, that could actually be a 19% crash in February from lower high to higher low. So retracement depth is going to shrink over time, and time is certainly a factor, not only in terms of retracement depth and what's possible in terms of a pre-halving correction, but also in terms of the price where we could accumulate. It's going to be the base of the market structure is currently around 19K, but it could go up to 21K depending on when we do drop. And just a last thing about a 20K potential revisit. If we zoom out to the 12-month chart, we always see the 4-year cycles. We see candle 1 represent a bull market peak, candle 2 represent a bear market of around 77% to even 93%, like we saw in earlier cycles. And candle 3 being the bottoming out candle, which we are in right now. It's a pre-halving year. And then we have the candle 4, which is the trend reversal, confirmed new bull market. And when it comes to new candle 4s, because that's what we're going to be anticipating in 2024. In the halving year, we see a candle 4, the last candle in the existing 4-year cycle, and that candle always forms a higher low relative to the base of candle 3. And it's an interesting exercise if you were to pull up the 12-month chart to have a look at these higher lows that occur from candle 3 to candle 4. And if that were to repeat, and it has repeated on 2 occasions over the past 2 4-year cycles that we have, if we see that repeat once again, then 20K, maybe even sub 20K, depending on how sharp slanting that higher low is going to be, it could be a possibility. And it's something that could happen in the next 5 to 6 months.
Yeah, well, it'll be absolutely fascinating to see how this plays out in the lead up to the halving, because for me it feels like we hit that bottom. I guess months ago. When was it? Sort of probably November last year when we got down to 16K very, very briefly. For us to get back down there, Rekt, it feels like we'd need something some kind of black swan event, really, in terms of I don't know, something fairly major in the kind of macro environment. And look, the macro environment isn't great, so that certainly could happen. But I think the fear that would inject into the market just before the halving, if Bitcoin was down to 20K or even below, that would be pretty intense. I would suggest.
It would be intense for sure. We'd have maximum pessimism, extreme fear, doubt, and uncertainty prevailing, and loads of narratives going around that it's the end of Bitcoin, or either the halving can't save Bitcoin or whatever the narrative may be. It's really important to just look with a level-headed perspective and look at the data science that, anything around 20K is a optimal buy-side opportunity for the long term. And of course, with the bear market bottom of November 2022, that was the bear market bottom, and there's quite a high probability to that. But in terms of a pullback, whether it's to 20K or sub 20K, it wouldn't go and revisit 15,500. At the very best, we get a higher low, and whether that higher low is going to be the 18K region or it's going to be the 20K region or 21, 22, it remains to be seen, but there is scope for that additional downside. And the way I think about this extreme psychology, because indeed we're going to need some extreme psychology to move price quite significantly to any direction, really. And when that psychology does occur, it's important not to be a part of it. So it's important to try and remove yourself from those emotions and not be part of the herd mentality, and just look at the charts with just a level-headed approach and understand that 20K is a great opportunity if we do get there. It isn't a given, but if the next 5 to 6 months, the historical tendencies that we always see in this period leading up to the halving, if that's any indication, that history, then a retracement just simply tends to occur. Will it happen this time? We can't say that it's going to absolutely happen, but if it does happen, we need to understand that we've seen this happen. This sort of tendency has happened in the past, and we should just utilize it to our advantage if it does happen, while ignoring all the psychology and the volatility and the narratives that will only serve to distract us from essentially trying to position ourselves and dollar cost average for what is going to be an extremely exciting next few months, but also next few years, 2024 and 2025.
Yeah, absolutely. And in the meantime, while Bitcoin just kind of puts along at around, as we record today, about 27,500 US, not really doing anything, and it just feels eerie in the market at the moment, because nothing is happening. But we know that the volatility will return, and if it returns to the downside, as you've said, Mr. Rekt Capital, that could potentially be an excellent buying opportunity for those who are prepared to hold their nose and buy at the lower prices, which is what you want to do if those prices do present themselves. But let's look ahead, I suppose, then, Mr. Rekt Capital, to the halving and beyond. So if we think that the halving is likely around 200 days away approximately, there are various halving countdowns around the internet, as I'm sure people are aware. We've got one on the Brave New Coin website, which I'll include in the show notes. At the moment, it's saying about 205 days away, so that will be around the 28th of April. But that can change day by day, that prediction. But essentially, probably April is about right. So, it's interesting also because we've got things like the much discussed and anticipated spot ETFs on the horizon as well, and they're likely to be either all approved or all denied in the months before that, which is kind of the other key narrative, I suppose, in the market at the moment, right?
Yeah, many people. It's a narrative that we've seen even as far back as 2017, 2016, when people in the market were getting excited about ETFs, and it just shows how persistent this narrative can be. And of course, this cycle, we're pretty much on the cusp of those ETFs really coming to fruition, and it's something really to be excited about. And that's going to be the prevailing narrative in this cycle. Every cycle we have a prevailing narrative, whether it's DeFi, whether it's ETFs or the CME as it was in 2017. We always have a narrative, and the ETFs are certainly going to be front and center when it comes to this cycle. lots to look forward to in that respect. But for the time being, we've seen a lot of delays predominantly or denials. But at some point, it's just a matter of time that they will be approved. But here's an interesting viewpoint on that, because if we think about the halving and the ETFs, of course, they're very different catalysts. And the halving event, if we look to the charts, we always see around the halving event in the short and midterm, we don't really see much price action happen, much volatility. There's not much excitement. There's not much extreme fear. Just a very kind of disappointing period, I think many investors would think around that time, because many people want to buy the hype and sell the news. So they buy in anticipation of a pre-halving pump or whatever the case may be, but we actually get a small pump and then a pre-halving retrace. And then for many, many months, nothing really changing, just consolidating and maintaining the highs. And loads of people are going to get disenchanted by that. And I feel like the ETF is going to be mimicking that sort of psychology in the same way. Many people are going to be buying in anticipation of price appreciation, and then it will most likely lead to a correction, and people are going to be also discouraged and disappointed by the price action, because the ETF is supposed to be such a fundamental catalyst and such a game changer in the space, which it is. However, my point here is that just like the halving, the ETFs are a long-term catalyst, that this catalyst is going to have immense changes for the price of Bitcoin and also other crypto assets in the crypto market. If we think about gold, for instance, the ETF was launched in the early noughties, somewhere around there. Was that 2004 or 2003? I can't remember at this point in time. But only 20 years later can we see the immense impact that has had on gold's price. And it just puts things into perspective that we shouldn't be focusing on the multi-week time frame, the multi-month time frame, although perhaps for this current cycle, it would be worth focusing on the multi-month time frame, but to have more of a long-term perspective, because that's where the ETF and the halving are going to really influence price over a period of several months and even future cycles as well, because the ETF is going to invite institutional interest on a legitimate scale, liquidity into the market that we haven't seen for 2 years now in crypto. So it's overall a massive, fundamentally positive event for crypto, but I think we have to adjust our time horizons to which we should expect price appreciation, because it's going to be more of a multi-month appreciation as a result of the halving, as well as the ETF that we should expect, rather than seeing something more in the short to midterm.
Yeah, I think that's very much the case, and that's why it's interesting how quiet it is in the market at the moment. Because at some point, if the ETFs are going to be approved, in the time frame that people think they will be, which essentially is before the halving, some people will get knowledge of that and begin to they'll use that information asymmetry to front run everyone else, and the price will begin to do something. But that has not happened to date. And of course, if they are approved, then you would expect that everyone will jump in and the price will start to move. And if those institutional inflows do start to flow into those ETFs at size, then again, you'd expect the price to move significantly. And we've seen, what Bitcoin can do when these extremely bullish news events or price events do happen. But Bitcoin can be priced, almost overnight, can be priced into almost a different paradigm. And it just feels, is that too good to be true in terms of an expectation that will happen? Certainly seen that happen in the past with the gold ETFs, even though over, I suppose, a multi-decade time frame. And maybe that's more how people should be thinking about it in terms of Bitcoin's journey to becoming that, really a really solid asset that a lot of people on the planet can aspire to have exposure to. And if that does happen, well, it'll be an interesting decade or two ahead. I suppose in that context, Rekt, do you want to talk about, not to get people excited, but just kind of what you see as the range in terms of potential upside over that next cycle?
So when it comes to Bitcoin cycles, we always break to new all-time highs, and that tends to happen within, if we're thinking about it in terms of the 4-year cycle, at the end of a candle for instance. So it would be, the analogous would be at the end of 2024 or at the latest in 2025. So the new candle one in the new 4-year cycle. So breaking to new all-time highs, if history is to repeat, then we'd probably see that happen at the earliest next year, late next year, and at the latest in 2025. But of course, that's the beginning of the journey, isn't it? Breaking to new all-time highs. What happens afterwards? And of course, that psychological number of 100K, it has to be a level that many people are going to be thinking about in the back of their minds before they go to sleep in the bull market. And it has to be a revisit, at least a visit for the first time, to just rally to 100K. But I feel like that was a major expectation in the last cycle, that Bitcoin is going to go to 100K. And I feel like with all this institutional interest coming in, I feel like we can even have a bit more of a higher expectation than 100K, and just see upside deviation beyond there. Historically, what's really interesting about the post-halving cycle particularly is we tend to see 518 days of uptrending price action to 540 days of uptrending price action after the halving before we finally reach a bull market peak. And so as much as time is going to be a factor, it's also going to be price that's a factor, and whether it's going to be around that psychological round number of $100,000. So anything after the halving, anything 500 days plus, that's when we're going to be getting close to a bull market peak for Bitcoin. And it's interesting how time is a factor here, but also some useful data science metrics can come into play here, such as the pi cycle top indicator, whether we're going to get that really important exponential moving average, or rather moving average crossover, because that's going to add some confluence. So 500 days after the halving, roughly speaking, what will the pi cycle top indicator show us in terms of a moving average crossover? Are we close to 100K? And we probably, with all this institutional interest, we could get beyond that region. But generally, that's going to be beyond 100K. That's probably going to be the point of maximum financial risk, where extreme fear, extreme greed, extreme FOMO and positivity and euphoria, over exuberance and over optimism, and just over belief in Bitcoin in general, that's when all those extremely positive emotions and combustible emotions are going to be coming into play at that point in the cycle. And it's just really important to just focus on these historically recurring tendencies, such as the 500-day plus period after the halving where we peak, and also data science metrics such as the pi cycle top, and whether we've breached that psychological area of 100K, because data science metrics also suggest that we could go to 120 to 150K. But it's really important not to get caught up in those emotions and move the goalposts in terms of those targets. I think it's really important to have a level-headed perspective with historically recurrent tendencies and data science metrics alike, because at that point in a cycle when everything is so fervently optimistic and bullish, it's really important to be able to lean on some cool, hard data science and indicators and metrics that can just help us navigate the space on a bit more of a level-headed playing field.
Yes, I like it, and I think you're right. You know, the 100K target or barrier. It'll be very interesting to see what happens if and when the Bitcoin price does approach that level, because I think you're exactly right. There'll be an immense amount of FOMO will kick in, particularly for people who don't have Bitcoin. They'll be kicking themselves and doing whatever they can to try and attain some Bitcoin, I suppose. Whereas a lot of particularly the longer term holders will be perhaps they'll have their own targets as to where they want to offload some of their holdings. And so, there could be some intense volatility, I think.
Absolutely. It's going to be a very combustible period when things really do get amped up and bullish to such a degree. But in terms of targets, it's also key to not think of a target as a destination, but rather a target as a process, because in periods where we just simply don't know where Bitcoin could peak, and that's just the reality of things, we can come up with some sophisticated scenarios and probabilities and sophisticated guesses at the end of the day. Where could Bitcoin potentially peak with the aid of data science and just metrics in general? It's always important to just try to understand that a target is a process, and not to sell all your Bitcoin, for instance, at 100K, for instance, or to do something bulk in that fashion. It's rather trying to dollar cost average out of the market. So as opposed to what investors are doing right now, dollar cost averaging into the market slowly but surely during this next 5 to 6 month period where bargain buying will probably be rewarded over the long term. With targets in a bull market, and the closer we get to a bull market peak 500 days after the halving, that's also where we should be dollar cost averaging out of the market to try and not time the absolute peak, because it's impossible. And most people will try. It's a very emotional thing that kind of gets on your ambitions to try and nail the peak and snipe the absolute top and have bragging rights in that respect. And you might even be so lucky to do that, but it's better and more pragmatic and prudent to be doing it as a process in terms of laddering out of the market in that respect. So you build rungs on the ladder, you sell a bit at 125, supposedly should we get there, sell a bit at 130, and so on and so forth, so that you are able to average out for an average price that's as close to the actual bull market peak as possible. And also the last thing here is to just try to capture the majority of the move. It's not about buying the absolute bottom and selling the absolute top. If you can capture 50% of the move, 60%, 40% even of the move, that's great. That's great. That's fantastic in of itself. So I feel like it's important to think of targets as a process rather than the destination, as it were.
Yeah, very, very well said. Words of wisdom indeed. I suppose if we zoom out a little bit, just in terms of the current market sentiment, Mr. Rekt Capital, you're an analyst on crypto Twitter, so you kind of spend a lot of time engaging with people, I'm sure. And look, you have your own community of traders, I think. So you'll be talking to people, no doubt. I'm just curious as to what you perceive as the current market sentiment. Like with people that are interested in looking at various altcoins as well. I'm sure it does feel very much still like a crypto bear market. There's not really any interest from outside the existing crypto community. There's no sort of media interest, no mainstream interest at the moment. That will come when the bull market returns, presumably. But yeah, what kind of sense do you get from the traders at the moment? What do they feel?
Well, I feel it's important to mention that we're around a quarter of the way through the bull market, and that's what many people don't realize. And most people, retail investors, are going to only join into the fun, so to speak, once Bitcoin breaks beyond new all-time highs. This is when it's always been the case when it comes to money flow going into Bitcoin, and also that money flow trickling down to large caps and mid cap and small caps also, which is where we see the risk curve really increase. And that money flow cycle is also quite interesting in of itself, where investors initially sit out of the market and use their fiat, whether it's pounds, euros, or dollars, to buy Bitcoin. And then once they do get above profits and price appreciation, there will be a bit more risk seeking and a bit more greedy to circulate their profits into smaller caps, into large caps, into smaller cryptocurrencies like Ethereum, for instance, which have a high market cap, but also at the same time smaller than Bitcoin. And then so the cycle goes all the way to mid caps, small caps, and micro caps, or even where you can really make 10x or 100x, but at the same time, there's a real high risk, high reward component there. So it's only in later stages of the cycle where people are most euphoric that they also become the most risk seeking. So at this point in the cycle, we're not seeing any of that risk on behavior in terms of altcoins. Altcoins are still very much retracing in established downtrends. A lot of them are still retracing in those downtrends. Very few are getting close to breaking them or have broken them and are trying to just take off from their basing periods. But generally, altcoins for the most part are 90% down. And that tends to be the case in bear markets, that we tend to see 85, 90, 95% drawdown for altcoins. And the thing about me saying that we're 25% through a Bitcoin bull market, but actually altcoins are not in a bull market, it's because these are two different aspects in the market. And it's only once Bitcoin gets sufficiently bullish that we actually start to see altcoins enter a bull market. And altcoins generally are a lagging indicator. And it makes sense if you think about it through the lens of the money flow cycle. Nobody thinks about altcoins until they get into Bitcoin, which is predominantly, for the most part, when Bitcoin breaks to new all-time highs, because the mainstream is talking about it. It's in the news. Friends are talking about it. Families are starting talking about maybe investing a bit. And this is where that money flow starts to kick in. And this is where we start to learn about altcoins. So to answer your question, Andy, at the moment, altcoins aren't really of interest. But the next direction for Bitcoin really is. And a lot of traders and investors right now are really counting on that ETF news and that ETF decision. But I feel like it's a matter of time, whether it's denied or just delayed over the coming weeks and months. It's a matter of time before it's finally approved, and probably all at once. But the key here is, if we're pretty much prepared that we're going to see an approval, then why not front run the market in that respect and just be prepared before that catalyst finally impacts price action. So at the moment, the money flow cycle hasn't really kickstarted too much. The focus very much is still on Bitcoin. And in this pre-halving year and pre-halving period, lots of volatility to the upside and downside could occur still, because we're still kind of not really in an established trend. But we are in a new bull market. The macro downtrend from the bear market, which that macro downtrend started in November 2021, that's been broken since March of this year. So we are in a new macro bull market, but we are kind of trendless in terms of where the next direction is. And whatever capitulation we get into the low 20Ks over the next 5 to 6 months, that's going to be really an enticing moment for bargain buying investors. But it will still be a long time before we actually see really people getting excited about Bitcoin and also altcoins. And just a last note on altcoins, many of them are in accumulation periods at 95% retracement from their old all-time highs, but nobody's interested in them because, there's extreme fear and maximum pessimism, of course, precede financial opportunity, but most investors don't think about it that way. And so most investors are going to FOMO into the established uptrend, whereas the bargain buyers are already slowly accumulating in preparation for the next market cycle for altcoins, which is still a way away, but it will come with time.
Yes, indeed. I'm sure it will. As much as yeah, the altcoin market is yeah, fairly depressed, shall we say, at the moment. It's just a fact of human psychology and greed that the altcoin market will boom again at some point. And yeah, it's the market cycle that you've described sort of goes from Bitcoin to the large caps and then down to the mid caps and the micro caps and the stuff like the meme coins, and that's just when it gets really silly. Yeah, so that's fun though.
The meme coins. Meme coins always have their day in the sun, so to speak. We always see segments of the market like that really take place and see euphoria there. And Dogecoin, for instance, is a prime example of that, where in the last cycle we saw an outcry or all investors rallying that we should get Dogecoin to $1 or
Yes,
something like that.
yes.
And so we always see that sort of psychology run amok at later points in the cycle. And Elon Musk was really also playing a part in that, because he was very much a supporter of Dogecoin. So it's interesting how that mainstream psychology does tie in with money flow going into riskier assets and also riskier segments such as Dogecoin. But of course, my personal opinion on Dogecoin is that it's one of the coins that has a reliable chart, in the sense that it's got such a recurring chart in its price action that tends to rally at certain periods and tends to reject and retrace at certain periods. So Dogecoin will probably rally again. And it's a given, because humans will once again invest in Dogecoin, because it's that predictable irrationality of the money flow cycle that inevitably we're going to see meme coins pump. And Dogecoin is a testament to that. It has pumped in every cycle, and it's going to be pumping in the next one as well.
Yeah, very as depressing as that may sound, what's really depressing or exciting, depending on how you want to look at it, is as much as Dogecoin could be the kind of the indicator that, if Dogecoin starts to go, then it makes sense that, that's an early indicator that, yeah, all the other altcoins could go. But there's always a new altcoin each cycle as well, and that's where it becomes really unpredictable, because you just don't know which one is going to take off. But there's always a new narrative. Like, for example, Shiba Inu was one, Pepe coin. Inevitably there'll be several new ones in the next cycle, and you don't know where they will come from or what is the catalyst that will drive them. And it's the paradox of crypto. As much as we like to think of Bitcoin as the kind of the big daddy of blockchain, and Bitcoin is the big daddy of blockchain due to the open source distributed ledger technology. Literally anyone can spin up any kind of coin they want and create their own narrative around it. And if you can get it to catch fire, boom.
Yeah, that's a really good point, Andy. In every cycle, we have the element of novelty, and we always have that new coin, or even an entire new segment of coins, such as decentralized exchanges or DeFi and decentralized applications. We always have a narrative in terms of which altcoins will rally the most. 2 years ago, I believe we had a DeFi summer, as we referred to it, where all these decentralized finance tokens were just rallying like crazy, and decentralized platforms and exchanges. And so we're going to have another altcoin narrative that's going to prevail at the forefront of the next altcoin cycle. And it's all about trying to be in the space, researching, doing your fundamental due diligence about projects, and trying to anticipate what could that next trend-defining narrative be in the altcoin space. And if you get close to figuring that out, and of course it could be a few narratives at the same time, but there are going to be loads of new projects that rally the most. In fact, those are going to be the new projects with very little price history, and as a result, very little actual investors. So this is where we can see the most returns, but also at the same time, Those are also the riskiest assets to invest in. But those are the coins that are going to be making the biggest gains in the space. Whereas coins from previous cycles, they already have investors who are just very eager to break even and wanting to at least break even or at a small profit on their initial investment that they've been waiting for 2 years or 3 years or 4 years to offload. And so it's going to be difficult for these older coins to be making new highs relative to a fresh new coin that hasn't really had many investors and can be pumped to the so-called moon. So that's the difference between new coins and established coins. Even Bitcoin itself, it's probably going to be diminishing in terms of return on investment. We're seeing across time diminishing in returns in Bitcoin. And that's just the way it is, that the market is becoming a bit more mature and there are more and more market participants in the market. And as a result, it takes more liquidity to move price a certain amount. It's not going to be as volatile as it was 5 years ago or 7 years ago when I first started. So it's all about trying to have a good blend and mix of established coins, but also those new coins. And so with the established coins, technical analysis can be really useful. And with new coins, also technical analysis can be useful, but also fundamental analysis and reading white papers and researching teams and doing your due diligence, that can really help in trying to anticipate what the next Ethereum killer, so to speak, is going to be. And there's always that narrative also, Ethereum killer, which fuels new projects to break new all-time highs every few weeks or so. So it's just that lies ahead in the cycle.
Very, very much does. All right, then. Well, it sounds like in conclusion, folks, as we start to finish off, dollar cost average into Bitcoin, perhaps Ethereum as well, and then pick your poison. Perhaps just a little bit of dollar cost average into Dogecoin as well. Inevitably, it will pump, but anyway. Not financial advice. Let's finish this off, Mr. Rekt Capital. It has been fantastic to have you back on the show, get your timeless perspectives on market cycles, the upcoming Bitcoin halving, and all that good stuff. Yeah, just any closing thoughts, anything else you want to say? And of course, please shout out your various websites and Twitter handles and so on.
Absolutely. You can find me on Twitter, where I post every single day when it comes to Bitcoin, and also when the time is going to come, inevitably, also altcoins. You can find me on Twitter at Rekt Capital. You can also check out my newsletter.rektcapital.co, where I post every Monday, Wednesday, and Friday without fail for the past 3 years, in fact. And so if you want to check out my YouTube videos as well, at Rekt Capital, you can find me there. And it's a very exciting time to be in the market, even though price isn't really reflecting that excitement. If you look at the charts and the historically recurring tendencies and that psychological story that we see embedded in these candlesticks and patterns, it's really exciting because the next few months are going to be a pivotal time in the market. And we should just try to make the most of that period, because these prices won't be revisited ever again. And it's quite a strong statement to say that. But if we look to previous cycles, we sometimes break below old all-time highs, but rarely below that. So just for context, in the future bear market, we could drop into 69K, which is the current old all-time high. But could we drop into 60, maybe 55, 50 at most? But we won't be dropping into current price levels. And that just gives us a perspective on just how good these price levels are in the context of the next few years and the current upcoming cycle. Because at the same time, if we look at price on a weekly time frame, last week, Bitcoin was pretty much sitting at the same price point. But if we look at it in terms of months, well, then we've rallied 100% since 15,500 in November. So within a year, 100%, it's actually not bad. But if we widen that perspective and time horizon to a year and 2 years and maybe even 3-4 years, then those figures really do get quite impressive. And I think being a hodler as it were, a long-term investor in Bitcoin, I think you will do really well over the coming cycle. If you're listening to this today, then I wish you all the best, and I truly believe that you'll do very well in this upcoming cycle. And it's a great time to be here, but also it's only going to get better from here.
Couldn't agree more. Fantastic. Wise words. Thank you so much, Rekt Capital. Always a pleasure. All the best, and bye for now.
Oh, this is a full-time job. Crypto markets really are 24/7. Oh, Elon's tweeted again about Dogecoin. I don't have the time to research the technical indicators of Dogecoin. What are you doing?
I just use Copy Trader on BitGet. One click and I'm copying the trades from an experienced crypto trader. Then it just gives me all the time in the world to watch my favourite Netflix shows and do all my favourite activities.
I've been up for 24 hours, I've had 16 cups of coffee, 8 energy drinks, and that bird noise is getting on my last nerve.
I think you need to go to bed.
Yeah, I need to go to bed.
Hands off, gains up. Start copy trading on BitGet.
All right, there you go. That was Rekt Capital. Man, always enjoy talking to Rekt, such an astute observer of the market, both from a psychology perspective and, of course, from a technical analysis perspective. Yeah, so, well, lots to talk about, lots to think about, very interesting times ahead. So I'm sure as things start to heat up in the 6 months ahead, Rekt and I were just talking again, and we've agreed that once things start to happen in one direction or another, we'll probably get Rekt back on the show because eventually the volatility will return. And be interesting just to see how the next halving cycle plays out, of course, and whether the ETF, whether those get approved and what happens if they do. So lots to look forward to in the months ahead. All right, that is the end of today's show. Please do make sure you subscribe to the Crypto Conversation in whatever podcast app you are using. But that is it for today. Thanks, folks. This was the Crypto Conversation for Brave New Coin. See you.